Okay, stocks, bonds, commodities, and money calendar for Money Calendar Monday. Here we go. We're looking at a chart right now, the S&P 500. What I thought I would do is just stick the retracement levels right square in your face so you could see them. All right. As you can see here, this is SPY. Here's the lows back in November. Here's that nice upshot that we've been seeing. Although you got to look here. I mean, pretty much for the last couple weeks, we jumped up and we've been kind of sideways. We've been moving sideways since about the middle of March now. We peaked out in the middle of March and we've not gotten above that peak since then. We've dropped. We're sitting somewhere right in the middle. Where are our retracement levels at if we were to pull back 38 or 50 or 62%? All right. Where are those? Let's back up and let's talk about them. Well, the 38% retracement level is right around 480 on SPY. Your 50% pullback would take you to 466, 62% down to 453. All right. We're going to talk for a moment about what may cause those to pull back and what may not cause those to pull back. One of the areas that could help in a pullback would be if the bond market were to continue to move off of its highs. The lows back in October around 82, the highs at 152, and we have been definitely hitting lower highs and lower lows since then. We are close to putting in some new lows for the year, all right, year-to-date lows. We bounced off them early this morning, but here we are sitting around 91.37. Now, as you can see here, we have 38% retracements at 93.74. We've hit that already. 91.65, we've hit that already. The next area we're looking for is if the bonds come down below 90, they should trade down to around 89.50, 89.55, and we should be able to find some support in there. All right, what would cause the bond market to move lower? Well, if we do keep interest rates where they are and we do not cut as expected, that's going to definitely put pressure on this instrument here, the iShares Barclays 20-year Treasury ETF. However, if war starts to escalate, then I think there could be a flight to quality and we could see the bond market get lifted up a little bit as well. So there's two scenarios for you on TLT. Now let's talk about USO because that one definitely has been moving in an upward direction. I like to say that it's all because of us getting long in this around mid-February, but the lows were down here at the end of the year at 64. By the time our patterns came in, we were sitting somewhere around 60, about 71 to 73, depending on the day that you were looking at the pattern beginning. Since then, we saw a little bit of support to that pattern, and then it was off to the races, and we put some new highs in just recently around the 82.50 to 83 level. Right, 85 is the round number resistance that we're looking at on this one. Although if we saw some easement of tensions in the Middle East, I think that would pull back oil a bit. How far will we pull back? Need to pull back before we find technical support? 75.47, that's the 38% level. 50% level is at 73.33, 62%, 71.18. And then there's gold. And gold put in, again, new highs today. I was watching gold last night in the overnight markets, and it was off about $20 an ounce. And within a matter of an hour, it flipped from $20 down to $20 up. I was trading around $20 up as of this video. We can see it now trading around the $216 area for GLD. This is new all-time highs for GLD. If we got to pull back, 202 is the 38% level. Around 197 would be the 50% level, and the 62% level would take it down to 192. I also think 200 is going to be a really good area of support just because it is a round number, but that's quite a bit back from where we are right now. And so very, very strong as gold heads in. This could be partially geopolitical. There's a lot of short sellers that are just getting their heads handed to them above 200 and have been buying back, and taking losses. These are folks that were bearish on gold. Fortunately, we have not been bearish. We've been bullish on this metal. and still are on gold and silver. All right. So from there, where do we go? All right. So what I'm looking at here is we could talk about technicals that we're hitting all-time highs and everything except TLT. TLT, if it stays in the range it's at, that's actually good for stocks and commodities. But then there's always the seasonality. Let's take a look at the seasonality. I've got 3 weeks on here. I've got last week, I've got this week, I've got next week. Last week's been primarily bullish. That's worked out very well. In fact, the last almost the last month has been bullish, and that's worked out very, very well. We've got another round of bullishness this week as we go from the 8th of April into the 12th. We hit tax day and the day after bullish, and then from there we start to turn bearish as we head into the third Friday of April. So looking at today's calendar, we see a 94% bull, a 6% bear. Where is all the seasonality playing into? Well, these are the top stocks we see right now. All of them, with the exception of Texas Instruments, is bullish. All right. As you can see, that's Chipotle, Lululemon's on here, MasterCard, Booking.com, Marriott. All right. So that we've seen the travel and leisure section really doing well. When you look around here, Groupon's on this thing. I haven't seen Groupon in a long time. As I come down, builders like Home Depot are doing well. But when you take a look at this group as a whole, it's travel and leisure that have really outperformed. And if you look at the travel and leisure sector, it's just coming off of new highs, year-to-date highs as well. So I went outside of this list and I looked at the last 7 years instead of the last 10. I like to go back and forth. This gives me 10 years, but then I'll flex back. I'll flex out as high as 20. I'll flex in as low as 7. This is interesting what I found here. This particular stock, last 7 years, profitable, all right, and has been profitable by the tune of about a little more than $6. So what is this stock? This is Expedia, which is also in the travel and leisure section. If you take a look at Expedia, the stock for Expedia is down off the last earnings. The earnings were okay. The outlook not so okay. It had a big drop as it moved from around $160 down to $130. So it took a $30 hit. It has since been bouncing between that $130 and $140 area. It just came off of $130 from last week, trading around $133 a share right now. The 133 calls right now are 320 by 335. So if we're looking at something that moves an average of around $6.50 between now and the end of its pattern, okay? And when is the end of that pattern? I'm going to back it up and show you. All right, so this pattern is a 15-day pattern. And when you take that 15 days all the way out, add some weekends on there, that's 3 weeks from today. That puts us around the end of April, the 26th, I believe. So we're looking at is the April 26th, 133 calls. They expire the same day the pattern expires. Right now, they're trading mid-price around 328. If you take 328 and you multiply that times 2, that's just a little bit more than 650, which is the average this pattern goes. If we did get $6.50 move out of this pattern over its next few weeks, that potentially makes this call a double. So do we want to take $6.50 on a stock price that's 133? What does that bring us? It brings us maybe about 4% on the stock price, or we could potentially go for 100% on the calls, but we do need to see the stock get up and go and get back up to around, not even close to, but around 140, maybe 139. That gets us up into this area, which is the double. So there you go. That was a quick lesson on stocks, on bonds, on commodities, the money calendar, where we see it looks like a mixed bag for the month of April, but travel and leisure. Take a look at this one. See what you think for yourself.